Good morning, everyone. Welcome to another episode of To the Point. Today's topic of discussion is withholding tax. First, let us see why is it in the news. Recently, the Supreme Court resolved the long-standing most favored nation clause issue, rejecting lower withholding tax rates to dividends and other remittances. Now let us discuss what is withholding tax. Withholding tax, also known as retention tax, is an amount of which deduction takes place directly from the earning of an employee by the employer. It is paid to the government as a part of the tax liability of an individual. The central government of India is liable for this tax collection. The government receives the amount immediately or as when any such transaction is incurred. In India, the central government is empowered to levy and collect taxes. Based on the income of the person, the tax is being charged. According to the Income Tax Act, Section 195, the payer must deduct tax when making payments or crediting an account for non-residential individuals. Now let us see how to calculate tax liability. It is by calculating the net income earned for the previous financial year in the current assessment year. If an individual is an Indian resident in the previous financial year and stays in India for a prescribed period, then it should be either reside for 182 days or more in the previous financial year, or 60 days or more for an aggregate of 365 days or more in the 4 years preceding the previous year. NRIs have a distinct tax liability compared to resident Indians. Tax is applicable to NRIs earning income in India from specified sources. First, salary paid for services provided in India. Second, income earned from property in India or income arising out of business carried out in India. Third, additionally, fees, royalty and interest from technical services provided by NRIs in India are also taxable. Let's have a look at the rates of withholding tax. Rates that are applicable for the payment of withholding tax to the non-resident Indian individuals are as follows. Interest charged 20% for dividends paid by domestic companies. No tax is being charged for royalties. 10% for technical services are charged. 10% for other services. Individuals are charged 30% of income and companies are charged 40% of income. Now it's time for the practice question. Consider the following statements regarding the withholding tax. 1. Withholding tax, also known as retention tax, is an amount of which deduction takes place directly from the earning of an employee by the employer. 2. It is paid to the government as part of the tax liability of an individual. Which of the statements given above is or are correct? 1 only, 2 only, both 1 and 2, or neither 1 nor 2? Send the answer to this question in the comment section. Stay tuned for the next episode. Thanks for watching. Have a great day.
Dear viewers, watch this topic in Hindi on our Drishti IAS Hindi YouTube channel.